Welcome back. You're watching Closing Trades, and joining us now is Siddharth Vora from PL Asset Management. Siddharth, hi. Good afternoon. We were talking to the Hitachi Energy Management a while back. What's your take on the capital goods play at this point in time? Numbers for many of the companies have been very good.
So I think we have a decent overweight to capital goods in our portfolios, and we continue to stay constructive. I think growth visibility within the cap goods space in India is quite interesting. Couple of risks, of course, elevated raw material prices, potentially elevated energy costs as well, and some supply chain disruptions could pose a little stress in the short term. But overall, structural growth visibility for most of the specialized cap goods and engineering players looks good, better than most other sectors. Valuations are also a bit stretched, but I think the growth kind of cushions value risks for now.
Therefore, Siddharth, in a segment like this, which has seen a one-way rally, obviously valuations is a risk, but from a business standpoint, where could the risks emanate from?
I think you're talking about capital goods, right, as a sector?
That's correct. Yes.
So I think raw material, margin compression, uh, potential, higher logistics cost, higher energy cost. Overall, we could see, some cooling off in margins broadly, but I think that's more of a short-term phenomena. The way I'm reading the markets for now, it looks like, the panic to positivity trade is likely to play out. Uh, Crude looks like it's peaked out. Dollar looks like temporarily peaked out. Bond yields also looks like it's peaked out, and war escalation also looks like the worst is behind us. So I think broadly, India can do much better. Not sector specific again. We could see a broad-based recovery in Indian markets beyond the next 1 or 2 quarters of pain in the numbers. I think we are set up for a good earnings recovery.
That rally, if at all it were to come, you obviously would have certain sectors which will outperform. Which are those, in your opinion?
So we've continued to like metals for the last 12 months, and we still maintain a significant overweight, closer to 20-25% of our portfolio is allocated to metals. Power and energy also is a big overweight for us. Pharma continues to be a slight overweight. PSU banks and industrials and auto ancillary. This is the broad construct of the portfolio for now. And we're looking now, to see if post the whole AI reset, post the tariff reset, and now the recent war and crude reset, where do we see new opportunities? Should we move out of defensive into cyclicals? And, the last 3 months, we've seen all the crude stocks like beneficiaries of high crude doing well. Maybe that trade could now reverse as crude looks like it's peaked out. So we got to find ideas where they'll benefit, where crude prices come off. And I think a lot of sectors in the consumer space, energy space, and cyclical space could recover with the crude cooling off.
Siddharth, you've seen the fourth quarter earnings season play out. What's your take on how the earnings have been, and for FY27, what's the kind of growth that you are penciling in?
So I think right now we've had a couple of standout sectors. Metals has been a clear standout. Industrials have been a clear standout. Auto has also been a clear standout. I think a lot of clarity for how the next 1.5 year will play out will depend on how realistically, quickly the war de-escalates, crude stabilizes, bond yields stabilize. So there's a lot of uncertainty and I think low visibility for now. I think metals will still continue to be a sweet spot in the markets, and pharma also looks like it's going to be a sweet spot over the next 1 or 2 years.
How do you play metals? How do you play pharma?
Metals we've allocated to ferrous and non-ferrous.
Okay.
Disclosure here, we hold all these stocks. So Hindalco, Nalco, JSW Steel, Tata Steel, Hindustan Copper, SAIL. We have a good position spread across quite a few names. And pharma, again, we focused on generics and basically, companies benefiting with new product tailwinds, off-patent tailwinds, regulatory clarity, and decent valuation. So we're not chasing stocks which have either trading very expensive. I think there's a lot of stocks within the value theme in pharma. Over the last 12 to 15 months, the broader overarching theme of the portfolio has been value as a style factor that we've oriented to over the last 12 to 15 months. We're getting some early signs that probably value style is likely to come to an end, and we might be entering a growth shift. So we'll be monitoring it closely over the next couple of weeks and months, whether we are actually able to make that value to growth shift after 12 to 15 months.
Siddharth, I'm going to tell with us. Siddharth, what do you make of the lending pack, the private sector banks? I mean, you said that value as a theme is something you all have focused on over the last year or so. I mean, what bigger theme in terms of value than those, right? And how has that played out for you? How are you reading into that?
So, we've had a massive, our PSU banks and NBFCs were closer to 35 to 40% of our portfolio. We've gradually brought that weight down to roughly 18-19%. And over the last 1 month, we increased some weight to PSU banks and financials, but we tactically manage the allocation to the PSU bank and financial space. It's not a complete buy and hold, even if we have, say, Bank of Baroda or Can Bank or any of these PSU banks that we've liked. We manage the weights at a portfolio level. We book in profits every now and then to make sure the volatility at the fund level is controlled, risk management is in place, and we don't experience too much of erosion just in the volatility itself. So we manage this space quite well, and we are constructive. PSU banks preferred over private banks for sure.
Okay. Siddharth, again, I'm sorry, I'm going to have to take a pause, take another commercial, come back, continue this conversation with Siddharth and more, of course, stock-specific action, plenty happening in the markets, viewers. Stay with us here on ET Now.
Welcome back. You're still watching Closing Trades, and we have with us Siddharth Vora. Siddharth, how do you look at consumption space, especially within the consumption, your quick commerce food delivery apps, Eternal, Swiggy, and QSR?
So I think personally, that space is very interesting. Competition is rising, growth is strong, acceptance and stickiness is very strong. So we like the space, but unfortunately, we don't, own any of these names. So we've been watching it from the sidelines rather than actually, having participated big time in these themes.
And you don't see much of a up move for these companies, or
Unfortunately, we manage money in a different way. We use quantitative models, and it's a quant-based fund. So our quant models are not able to appreciate some of these companies, their business models, their numbers. Actively, I can assume, they look interesting. The growth, the future looks very good, but quant models cannot still find the data good enough for, taking an investment or allocation call in some of these names.
Okay. Thank you so much, Siddharth, for that. We'll leave it at that, Siddharth. Very engaging conversation, and look forward to speaking again very soon. Okay.